Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ed Pearce of Paragon Digital. Ed, thank you for joining us.
Sure, Hall. Good to be with you and good to get a chance to talk again. We've talked a couple of times and appreciate all that you're doing in the startup world.
Well, I appreciate that. Thanks so much for joining us again today. What was your background before you started investing in early stage companies? What did you do that led you to where you are today?
Well, as many people would say in the investment world, in the startup world, I didn't start in this particular area. However, I did start as an attorney. I was an attorney for a number of years, and then I was general counsel of two publicly traded companies. When both of those companies sold on different periods of time, I went to work for a very good venture capital firm here in Dallas and really just got the startup. I love starting companies. I love coaching people through the process of starting. And so I was been with a couple of different companies that made deep use of venture capital. And then 5 years ago, I bought my own company, Paragon Digital, to continue the process of investing and operating a technology leveraged business.
Well, great. So the world has changed quite a bit over the last few years, but continues to accelerate forward in new technologies and new markets and new things. And all that's going on, what excites you right now?
Well, I think the whole world of data, and data has a lot of different applications, right? So we read a lot about massive amounts of data and what's going to happen with it and various things like that. Almost any industry or any business that your listeners may be involved with has essentially some aspect of data. For myself, for example, we took a business that had been running for a number of years and said, how can we really play into the desire to just know more in a particular area? So in oil and gas, we took the land department and we said, if we provide like up-to-date information in connection with a merger or acquisition divestiture, as it's normally called in the oil and gas world, if we provide sort of a deep view of all the land documents that a company may have and provide the ability to lift data, migrate data in connection with all these big transactions that you see out there, then that would really add value to the data. So the data essentially in businesses, I would encourage people to say, how does the data come alive in the business that you're looking to do something with, where it's not static and only historical? How do you lift sort of currency out of the data so that it becomes alive? We did it in oil and gas, and we're doing it in accounts payable.
Well, they have a saying now that data is the new oil. What do you think about that saying? Do you think that's accurate, or do you think that's overstating the case?
No, I think it certainly has some similarities. I hope that data follows a pricing path that's more stable than oil and gas. So oil and gas has the problem of supply and demand, and it's in some ways an artificial market, if you will. For a number of years, oil was basically controlled by what was called the Seven Sisters. That's Saudi Arabia, Venezuela, et cetera, et cetera. So as those countries go up and down in both political issues as well as pricing issues, the supply and demand can go all across the board. And so that's part of what leads to the dramatic upswing and downswing in oil prices. So that's a major challenge the industry has. It leads to opportunity because systems that are in place in oil and gas companies, for example, have a relatively short life. They'll go for a few years. A downturn will happen in oil and gas. They'll go in the dark, and then they have to be revived again at the next upswing. So we're constantly looking at an up and down cycle in oil and gas, where data, frankly, can really be a kind of an optimizing trend or a trend that provides some stability within the companies themselves. So it's a good area to get into.
Well, it's great. So you've been in the startup world for quite some time and seen it from the investing side and the startup side. What's your advice for people they're now starting to invest in startups? What would you tell them?
Well, I think it's to be, in some ways, very practical in your investment. For one, what do you know at all, or what do you know best? There's more risk in investing in something that you don't know, and it's It means that you have to be more careful in the investing range. If you don't know the particular area, I was with a company in the last couple of days that's a very promising biotech startup, and they were talking a foreign language to me much of the time. But I had people with me that understood that language, and so we were able to sort of comprehend it. But just be cautious as you invest. Do your due diligence. Do an area that makes sense to you. I heard Peter Lynch, who was the sort of the penultimate investor in mutual funds for Fidelity a number of years ago, say, essentially invest in what is a common sense area that you know will be good. And so you have an instinct for something that'll be a good investment. Follow that instinct, learn more about it. Make sure that you're investing in kind of a rising trend as opposed to a declining trend. It's more difficult. But invest in things that really interest you and in which you can either have or ascertain some level of expertise or background. That would be the best way to start an evaluation of a investment.
Well, that's good advice. How about for startups who are raising funding and going out and running a business for the first time? What's your advice for them?
Well, I would say the collateral or the opposite side of that is don't just be a solution looking for a problem or a problem looking for investment. I mean, be a problem that you're able to fix the problem in the solution that you're trying to promote. Oftentimes, we may have a particular expertise in an area that doesn't lend itself to actually being an investable opportunity. And so be very careful that you're fixing a problem with your solution and not just talking about the technology that you like. Make sure that it's fixing a business problem.
Well, it seems like the startup world is very frothy today. There's a lot going on. There's mega investments going on at the upper end. There's more startups coming in every day. How do you see the industry evolving these days? Where do you see it going?
Just like the startup community, I think it'll get basically require more, I would say, sort of packaging or more precision and more discipline. So oftentimes, angel networks in the last generation of up and down, boom and bust cycle, would perhaps be investing in one particular company that an angel may like, et cetera. I think you'll see more and more consortiums kind of come to the table. And if you look at angel groups, I think they'll come back, but with disciplines as to the number of investments and the type of investments that they look to do. Your own service in Austin, which I'm somewhat familiar with, essentially allows investors to come in and really have a disciplined approach at looking at the investment itself. So I think that's going to be an increasing trend, not to just hold our finger in the air and invest in something we like, but really put the disciplines against it that sometimes would have been only available to larger venture capital firms.
Great. So over the last few years, what do you see as the biggest change in startups coming through? What do you think is different now than it was several years ago?
I think it's really interesting. I think the whole idea, there's 2 or 3 trends I think that are just reflective of the way we look at culture. Like one is in the nature of community. Deals that come through that focus on the community of certain individuals aligned in purpose or aligned in some other measure, I think are really something that's an interesting idea that we're going to see more and more. And if you look at a lot of internet deals, they're not really based so much on the product. They're looking, how do we all get together? How do we share information? How do we promote a common interest? And how do we then make a commercial transaction around that? So almost, if you look at travel sites, if you look at buying sites, if you look at a lot of the other things that are happening, they're taking maybe beyond patentable technology, and they're really applying a technology, but allowing individuals who come together to really make use of a community aspect. And I think that's a great aspect. We've talked about data. Data is just going to continue. The ability to use and make use of information is going to just continue unabated.
Well, that's great. So what's your investment thesis today for startups? What are you looking for that makes a good investment?
Well, I'm looking for a real company that can get on the ground and actually make sales. I need to understand the sales cycle. I need to understand how you're going to make money. Yeah, I know you're going to have a great technology. I know you're going to be smart. I know you're going to be dedicated to this. But I want to know practically. I hear the presentation, and I sit back and I say, who do I sell this to? Who buys it? How much do they pay? And et cetera, et cetera, et cetera. So I'm often falling on the business side of every deal I look at and saying, can I really make this a real business that makes real money with real sales? And sometimes, I've missed that from time to time. They haven't all been home runs, believe me.
And so are there any particular startups that you've come across recently that fit that thesis?
There are a couple I can't talk about, unfortunately, which is kind of problematic for all your listeners, but contact me individually. I work with a group in Dallas. I'm really pleased and proud to be part of the Lion's Den in Dallas as a co-chairman and founder. And we get companies coming to us all the time, and the companies are really quite good. They might be in data management. They might be in healthcare. They might be in photonics, kind of interesting topic. Might be in gene therapy, frankly. So we get really deep companies coming to us that are tremendous opportunities. And so we look at those companies, we present those once a year in a conference. But throughout the year, we have several companies. And you and I have talked about some of these companies also. So we like to think of you as a great partner of some of the companies that you are involved with in the Austin area. But they're all around us. And as we sort of look at them together, it helps us build sort of this unofficial syndicate where we're looking at deals.
That's so true. Startups have to go from group to group to raise all of their funding. And so once we're all just one giant syndicate, each doing a little bit to help the startup get along. And there are many startups out there. But when you look at startups today and starting a business, what do you think is the biggest challenge they face in starting up a company?
Just starting a company in general today?
Right.
Well, obviously, funding and capital is the biggest challenge. But I urge companies to get your culture set early on and to get a culture set within your own organization that will allow for there to be dedication. And everyone's has sort of unity around the purpose of the company and then unity around the product. You want to have everyone on the same wavelength as to what you're building or what you're creating or the benefits of what you're doing. So you just have the people that believe together. If you have people that believe together, then you've created a team, and then the team needs to have sort of all your boxes checked at some point in time. You don't have to have everything done today, but I do make the comment, whether you've got 2 people or you've got 2,000, you're still doing human resources. You just have to, it may not be managed by a dedicated HR specialist, but you can't ignore people and what people like, what they believe in, and create a culture in your company that takes the whole organization forward.
Well, that's good advice. So there are many new sectors out in the market today. You've talked about data already, and there's many others coming up. Which subsectors or applications do you see as good immediate opportunities to pursue?
Well, I'll apply it to some of what I said before. We do an awful lot in the land and title area, for example, but oil and gas, because I probably know more about that than other sectors. Like if you ask me deep questions on security, I wouldn't be much help to you. But in the oil and gas area, has not been progressive in either intelligent systems, artificial intelligence, machine learning, things that kind of evolve around those topics of deep search and utility. So I would say that particular industry is ripe as a real tsunami type trend to wanting to take technology that has been in existence or applicable to other industries and to use it. The ability to look at fault tolerance on equipment or pipelines, the ability to look at where will be my next fault in a particular area that I can predict it in advance, predictive analytics. And how do I use the information in the oil and gas company? There's just the industry as a whole is really behind the times in the data transformation area.
It seems like data is going into many more sectors now. It's not just in tech, but it goes into oil and gas. It goes into automotive. It goes into many other areas. So it seems like it has a lot of opportunity left to pursue for sure. So what else should we cover that we haven't?
No, it's just really, I think the whole area of starting a company and entrepreneurship and the ability to dedicate yourself to something that you can be enthusiastic about every day when you get up. And those of us who do this, it's a hard road, as you know, but it's essentially the sort of the intellectual enthusiasm that you can have with an idea that you see develop into from an idea to a product to a company is really exciting. So I encourage everyone to do that. And you can have a real purpose in what you're doing by developing a business and a company. And by the investment side, it's really interesting to see the next company. It's always interesting.
Well, great. Well, how best for listeners to get back in touch with you?
Well, I think you're certainly welcome to call me with some knowledge that it's hard to return calls. I would say I can either give my email address. I'm happy to do that, Hall, or you can include it with the material that you email out. What would be the best way to do that? I can give my email now if you'd like to.
Well, I have your email, so I'll just go ahead and include it in the show notes. If anybody wants to catch up with you, they'll have that in the notes there to work with, as well as your LinkedIn profile. Appreciate your taking time to talk today. Thanks so much for the advice and the wisdom, and looking forward to catching up with you again soon.
I'm always good for one free call, so give me a call. I'll give you whatever advice I can. Be happy to help you.
Thanks so much.
All right, my friend. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.